Watching charts glow green, trading in my dreams. Wall Street's my scene, flipping stocks like bees. I hold when I believe, sell when I deceive, sell when I deceive. Profits in my sleeve, gains I will retrieve. To the moon, to the moon, to the moon. Take it higher, sweet big fortune soon. To the moon, to the moon. Profits soaring to the stars like a balloon. Tickets on my mind, dollar signs I find. Bullish all the time, candles in a line. Margin calls no more. Ooh, bears I must ignore, bears I must ignore. Lambo at my door. Ooh, stocks forever soar. To the moon, to the moon. To the moon, take it higher, sweet big fortune soon. To the moon, to the moon. Profits soaring to the stars like balloons. To the moon, to the moon. Take it higher, sweet big fortune soon. To the moon, to the moon. Profits soaring to the stars like balloons. To the moon, to the moon. Take it higher, sweet big fortune soon. To the moon, to the moon. Profits soaring to the stars like balloons. To the moon, to the moon. Take it higher, sweet big fortune soon. To the moon, to the moon. Profits soaring to the stars like balloons.
Okie dokie. To the moon, baby. To the moon. Din, 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 din. Sorry, I had like 3,000 things go on the moment I hit live. Chicka, chicka, chicka. Chicka, chicka. Chicka. Good morning, everybody. Oh, come on. Spilling coffee. No. Good morning, everybody. Got coffee all over this. Got coffee all over my desk now. Why? All right, S&P 500. Are we going to hit our 6,000? We've already made history today because we got another high. This is all over the place, this coffee. Ay, caramba. There we go. Ay, caramba. All right, so we'll be watching to see if S&P 500 can hit that 6,000. We are a stone's throw away from it. I have the S&P 500 chart up. We got up there about 8 points away. Market net flow today is bullish. Market net flow supports a move to that wonderful 6,000 level. It would be very, very lame if we did not get there. That's for sure. That would be very, very lame. Give me one moment here. I want to make sure that my streams are up on all platforms. We did have some news out of China, which is causing a lot of the names in China, as far as equities go, to get hit once again. I was stopped out of my position the other day. Then it ran right back up, and I was like, oh, come on. And then it's right back down again today. Ay, caramba. Let me see here. Wait. Okay, no, it's all live. It's all working. Here we go. All right. We'll take a look at some zero date levels, what the market's doing, if there's any opportunities. I think that we're going to that 6,000. That would be the hope. Doesn't mean just throw in a trade and let it go, but that would be where I'm looking at. Now, today, we're looking at the SPY right now in the 15-minute time frame. We did come up into the upper monthly expected move. So what would be required here is to get us through the monthly expected move, more north into the daily implied move of the day, which would support that 6,000 or 600 on the S&P 500. Okay, so we are running up. It is the 8th of November, and we are already up to its upper monthly expected move. The market priced in up to 615.52 for the entire quarter. Remember, we still have the potential for a Santa Claus rally, but this market went pretty far, pretty fast, and it's going to have to digest. That's for sure. It would be cool if it digested after getting to 6,000, but we'll see. But we'll see. Right now, in my portfolio, I have longs on. I don't have any shorts on at the moment. I was considering hedging out the portfolio a little bit or putting on a couple if we get through that 6,000 on the S&P 500. And I'd probably look at the most extended areas in the market, not necessarily the S&P 500, right? If I go over to the Qs, for example, which are the strong ones, this one is already outside of its upper monthly expected move, way outside of the weekly. Give me a second. So that's what Qs is doing. But then you take a look at IWM, and IWM is well outside of the monthly expected move, right? And then the quarterly move is up here. So if we can get some, a little bit further of a push, then maybe I'd look at individual sectors or what really drives these to potentially put on some sort of a trade that could come in a little bit. I'm not really there yet. I just prefer, in this current context, just to manage my longs. And if they start getting stopped out, I just wait for things to tighten back up, and I go from there. I do not have any shorts on at the moment, clearly. Or, for that matter, any hedges. I guess the only hedge that I have is that I'm not, like, super, super long my portfolio, right? I'm not, like, 100% invested or anything like that. Ah, tasty. Tasty good. Swiss. Good morning, Christina. Good morning, Peter. Good morning, nobody. Good morning, Swiss Lectures. John, Sly. We'll take a look at DJT. We'll look at any names that you guys want to pull up. It's quiet today so far. Let me make sure that I'm on camera. Okay, I am on camera. Boom, 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 boom. Here we go. All right, let's pull up the S&P 500. Let's talk about some levels. Yesterday, I didn't trade all day until one random trade showed up. I'm not one to really call trades out live or anything like that. I don't like doing that because I do not like the responsibility that that brings. But I'll map out levels, and sometimes I'll trade at those levels, sometimes I won't. I need people to make their own decisions for themselves. So I don't really have anything to prove. I don't think that you should have anything to prove either. It's about making money, and it's about making money consistently. And doing what works best for you. Remember, there's really no right or wrong way, right? There's really not, because you can make money anyway. What matters is really just how you manage risk, right? If you go too crazy on some positions and not too crazy on others, you know, you're going to have inconsistent results. That's a way to trade. If you want inconsistent results, the only way you can have inconsistent results is by having an inconsistent methodology around risk management. That's a big word. That's a big word for me. Indubitably. I don't even know what it means. I just said it. Okay. I got to pull up my Owanda chart because the SPX CBOE one, I wanted to pull this up just to see if we can come to 6,000 early in the trading session, but we're backing off already. Punk. SPX Owanda, there we go. This is the one that I'm familiar with. Okay, let's talk about some levels. So the level to watch for as far as the upside goes, 6,000, right? We can get through 6,000, right? It's totally fine, but getting pinned in at around 6,000 makes a lot of sense because it is a gigantic focus area in terms of gamma exposure. And even if you look back to prior videos where we talk about the JPM collar, it's right up in that area too. I think it was like 6,020 was kind of the higher end of it or something like that. 650, 6,020, 6,050, something like that. It's right in and around the realm of 6,000. Let's go to zero date. So the zero date levels this morning was 59.70 and 59.40. And those, interestingly enough, those were already below us and there wasn't really anything above us, which makes me think the entire time, like if we do get up to 6,000, it could fade easily. Unless if obviously something changes. But now look at the zero date structure. It did change a little bit, actually quite a bit. And that's 59.95 right here. So yeah, 59.95, that is, I'm going to go ahead and clone this out. That was not there this morning. So I'm going to go ahead and clone and I'm going to put this up to 59.95. It looked like it already reached it. So that's okay. It's still the main area of concentration. Let's go ahead and put that there. There you go. So close, right? So close to 6,000. Now, this was on the SPX Owanda chart. If I do go back to CBOEs, because it might look a little bit different for you, but if I do go back to CBOE, you might see just the numbers a little bit different. Like it went up to 59.92, which was 8 points away. Okay. If you want a little bit more accurate reading, just look at the SPX by CBOE. The only reason why I use the Owanda chart is for its continuity. Okay. The continuity. Yeah, we can look at China again. We're going to look at China. There was news out in China. The news out in China was right here. Should I go to my newsroom? Should I take you to my newsroom in order to read the news from China? Welcome to the newsroom, people. China. So the headline here was from the Wall Street Journal, and this really did cause stocks to move. But it says, China moves to ease debt concerns, but again, holds off on stimulus measures. I brought you into my $30 million studio right here on the top of a New York skyscraper just to show you that. Okay? But yeah, Chinese stocks are getting hit. We'll see, right? This is the thing about Chinese equities. Like, they're like this. They do this. It's crazy. Okay, so we now have that zero date level at 59.95. That is an area of focus. The goal here is to try to get to that 6,000, obviously. So look for pullbacks. I think pullbacks can very well get bought. Now, things have ran far and fast, so you do need to respect some distribution-y type moves where you can get a little bit extra, larger than normal candles, right? Authoritative candles. So on the downside, I'd be watching that 59.70. And if we get further downside, you have 59.50, 59.40 over here, which I think would be the floor for the day. So, I mean, I'll draw that in. I think that these would be the key levels to really just watch out for. Right? Unless we get some crazy stuff. But I would say this would probably be the floor there of the day. Not to say that it's going to reach there. And I'd say up here would be the higher end. I don't know if it's going to match up with the CBOE stuff perfectly, but draw that up here like so. Go to properties. Go to set. No, wait. Okay. So there you go. Oops. Okay. That's what I would say would probably be the range for the trading session today. Okay, market net flow here still has a bullish divergence, but they're both under the zero line here. So this is where you can get some chop. When I look at the 0 date levels down here, 597 looks to be that magnet, and we're really just kind of at that level. And then above us, we kind of have something that can repel us, and that's about 598. So there's not a really clear sight here as far as direction of market, especially with market net flow like this. The main source here of why I think we can go higher is if 0 date level remains to be this kind of structure where you just have this big gigantic pin over here at 59.95. So the further we move down from this, right? The further we move down from 59.95, and if this doesn't change and market net flow is kind of remaining this, bullish structure here, I'd be looking to buy that dip, right? Perhaps if you look down here at 0 date and you look at these SPY levels, right? So 596 down here, this can repel price. So if price comes down from 87 cents from where it currently is, 85 cents, that could be a potential level to watch. We did that yesterday at 594, right? So 594 was literally right here, and we talked about it right over here. And then the levels changed, but we kept it up, right? If you were on the live stream, and it actually came right into 594 and managed to hold. So 595 would be that level kind of interest right now, just based off of this specific chart. So what we can do is come over to SPY and see if it really were to drop down to 595, pay close attention into this area, right? So we'll just draw a little line here, be like, boom, 595, properties. And it could change as price gets near there, or if price gets near there. Or if price stays away from it, it can change too. But that's a current level to maybe watch because somebody had asked about if there is downside. So I'd be watching into 595 if there's downside, okay? But as it stands, like I said, looking at the 0 date levels, and if this doesn't grow and price breaks away, I'd be looking to buy the dip. Right back up. Because strong markets, man, they're hard to take down. They go through it in order to, markets, to top a market, it's not just like a quick move. Typically, it's like a back and forth, shakes people out, takes a while to distribute some of all that bullishness. Let's go. Yeah, so Mighty Duck's asking about the gamma chart. This is 0 date levels. As far as the narrative as to why there is so much, why is this so significant? Oh, well, you're looking at the 6,000. You're talking about net gamma probably. What you're asking, why is there so much significance at 6,000 mark? You'll typically see more significance at round numbers, including like big numbers like this, like a 6,000 mark. Okay. But knowing the reason why, it really is not going to do much for you, right? It's like, I don't know the narrative as to why traders around the world are focusing in on 6,000. I don't. All right. But that is a level of interest, a huge level of interest. And we can tell that by just looking at the exposure right now. Pull up a net gamma chart, bam, 6,000. Now, why is it